Well, a quick check on the Asian markets. There's more green than red on the screen. The Japanese index had opened up in the green. Remember, there was some strength on the yen. There's weakness on the dollar index overall, but that market continues to hold in the green. So let's pull up the Japanese index and the other couple of markets as well that are opened up. There's green on the screen, so pretty good news. And that's why the SGX Nifty is indicating that we're likely to see a bump up of around 45 to around 50 points. The Straits is the only market from all the Asian markets that have opened up that are trading in the red. But let's focus on stocks. Bharati Airtel, that's going to be a stock in focus. The company held its investor day on Friday. Rima joins us with the key takeaways. Hey Rima, good morning.
Hi, good morning. Well, Bharati held its maiden investor day on Friday. It was in market hours, and the key takeaway is that the company believes that ARPUs have mostly bottomed out. ARPU is average revenue per user, and they expect pricing trends to be stable in the midterm. This, I think that the market's got a sense of it, which is why the stock reacted in Friday's trade, ending with a gain of about 9%. The other important takeaway is that the company said they expect capex to moderate in the midterm. While they haven't given us a capex guidance for FY20, the fact that it's not going to be as high as it was in the past few years is a positive. And going ahead, the capex will be driven by capacity improvement. That will be the key driver. They also indicated while the environment remains extremely competitive, if required, they have the support of their long-term partners and they can raise capital to remain competitive. As of now, they have no appetite to buy 5G, but they will evaluate when the ecosystem is positive. So IFL says that while the near-term India EBITDA weakness will keep the stock under pressure for the next 6 months, they believe it will trough out in that period, and that's the reason why they maintain a buy call. So the top three key takeaways, according to me: one, ARPUs have largely bottomed out. Secondly, capex will moderate from here on going ahead in the midterm. And thirdly, they have the avenue to raise capital from its long-term partners if the competitive environment so requires it.
Okay, well, Rima, Cognizant held its first ever investor day. Fill us in on that.
Yes, that too was on Friday, and in fact, Cognizant stock was up nearly 3% in its trade on NYSE. Now, the reason we're talking so much about this is because the company has changed its strategy. The earlier strategy was to focus on profitability, and now it appears that the company's focus is going to be on growth over profitability. And because the company's focus in the past was actually more on profitability, Cognizant, which was once actually the fastest growing IT company, had ceded its top position to the likes of TCS. So TCS growth this year is going to be much higher than Cognizant, and Cognizant had to cut down its guidance. So what they've said in the Investor Day, Cognizant, they said that on an organic basis, they expect to grow between 6 to 9%. Acquisitions will add another 1 to 2% on an annual basis, which means the total constant currency growth on an average will be anywhere between 7 to 11%, and they see the digital growth at 20 to 25%. They maintain their margin band of they maintain their margin target of 19%, but that will be for 2019. From 2020 onwards, they expect only a 10 basis points improvement in margins over the medium term. They've also indicated what their capital allocation plans will be. 50% of the free cash flow will go for dividends and share purchases. 50% will be used for acquisitions. But the key takeaway from an Indian IT company point of view is the fact that the company's focus is going to be on growth rather than on profitability. And will that impact the Indian IT companies in a negative way? Because Cognizant could could look to eat into, or be very aggressive when it comes to large deals, something that they perhaps want in the last few years, given its focus on profitability.
Okay, all right. Thanks so much for that, Rima. Well, let's move on then. Everyone's celebrating, that earnings season is over. But Anisha over the weekend was looking at Siemens. Hi, Anisha. Good morning. They came in rather late and kept you busy over the weekend. The numbers are good though, eh?
Well, yes, the numbers were good, and I hope this is the last and there are no more companies coming out with earnings. But Siemens actually surprised me on the positive side. The revenue growth came in at 25% versus our expectation of 11% growth. The margins also expanded. In terms of the revenue, we have the number coming in at 3,900 crores versus the expectation of 3,500 crores. It was the power and gas segment that actually outperformed with the revenue uptick of around around 38% year-on-year. Process industries also grew by around 20%, and similar was the case with energy management. The margins also expanded by 60 basis points, and this is despite having a rupee headwind, because remember, Siemens is a net importer when it comes to the commodities, and we have seen commodity pressure also play out for a lot of companies. But Siemens, because of its operational efficiencies, was managed to actually expand the margins by 60 basis points. In terms of net profit, also ahead of the estimates at 280 crores versus 250 crores expected. Order inflow as well has been a bit of worry for Siemens earlier, but this time around it has reported a 38% growth in order inflows, came in at around 3,700 odd crores. In fact, brokerages are also positive. Deutsche Bank, for example, maintains the buy call with a target price of 11.30. They say that Siemens is growing much faster than its peers, and they also like the fact that the order inflow of the company grew, giving it good visibility for growth in FY19 as well. So overall, a thumbs up for Siemens, and the expectation is that it might open up in the green. But do remember, it has run up quite a bit already in the last 10-15 days. Back to you.
Okay.